Do you want to invest on the Ghana Stock Exchange but feel confused by all the fancy words? What's a dividend? What does profit to earnings ratio even mean? Or why do people even care if a stock is illiquid? Stick around because in this video we are breaking down over 30 plus key terms you must know to confidently invest in the Ghana Stock Exchange, especially if you are a beginner. Do well to like this video, subscribe to this channel if you haven't already, and leave your comment to suggest what you think about this video in the comment section. I reply to them all. We break down some basic terms every Ghanaian investor should know. First is GSE, short for Ghana Stock Exchange. This is where all listed companies trade their shares. A share or a stock is simply a part ownership of a company. So if you buy a share in MTN Ghana, you own a part of MTN Ghana, that is the company. Speaking of MTN Ghana, you will usually see their ticker sign as MTNDH on the Ghana Stock Exchange. Every listed company on the Ghana Stock Exchange has one, that's the ticker sign. Ecobank is EGA, that's Ecobank Ghana, Ghana Commercial Bank is GCB. Now, equity is just a fancy word for ownership. Stocks falls under this. If a company is offering shares for the very first time, that's called IPO or initial public offering. Once listed, it becomes a listed company and its shares are available for public trading. To buy those shares, you need a broker like the Data Bank or IC Securities. They handle the transactions. And where are those shares stored? In the Central Securities Depository, Ghana's data vault for shares. Finally, to be able to hold those shares, you need a demand account. That's a personal wallet for investment. Now, let's talk about the numbers and things that helps you understand how the market works. First is market capitalization or market cap. It is the total volume of a company, and that is share price times the number of shares. And now there is liquidity. That's how quickly you can buy or sell a share without moving the price too much. Company like MTN has high liquidity. Volatility tells you how much company stock price go up and down. More movement is equal to more risks. We also have market moves. A bull market is when prices are rising and a bear market is when prices are falling. When buying a stock, look at the big price. That is the price buyers are willing to pay, and the ask price is the price sellers are willing to sell to you. The spread is the gap between the two, that's the bid price and the ask price. You place orders in two ways. You have the market order, that's buying or selling at the current market price. You have the limit order, that's when you want to buy or sell at your own chosen price. Your portfolio is a total mix of all investment, being the stocks, tribute of anything, and smart investors use diversification, that's spreading your investment across multiple assets to reduce risks. Now, let's talk money. How companies reward you and how to check their financial health. First is dividend. That's a portion of the company's profit paid directly to shareholders. Free cash just for owning the stock. Now, to look at dividend yield, that's how much you earn in dividends compared to the share price. Higher yield, better income. The dividends payout ratio tells you how much of the company's profit they are paying out. A high ratio might mean less reinvestment. The next is earning per share ratio or the ESP. It shows you how much profit goes into each share. Combine that with the share price and you will get profit to earning ratio, a quick way to know whether a stock is overpriced or undervalued. The book value is the total net worth of the company, and return on equity tells you how efficiently they use shareholders' money to make profit. Now, let's get into some advanced terms that gives you the edge. First is capital gain. That's how much you make when you sell a stock for more than you bought it. Simple and sweet, but timing matters. When you buy a stock after the ex dividend date, you won't receive the next dividend. So always check the date. A right issue is when a company offers current shareholders more shares, offering at a discount. A bond issue or stock split gives you free extra shares. No cash, just more ownership. Watch out for illiquid stocks. They don't trade often, so it's harder to sell if you want to. Ghana Stock Exchange indices composite and financial track the overall market performance, just as the S&P 500 does in the US. A suspended stock is temporarily blocked from trading due to regulatory issues. Any event that affects shareholders, like dividends, are called corporate action. Underwriter, usually a bank, helps companies to sell their shares during an IPO. And know the difference. Speculators chase quick money, while investors play a long-term game. Be the investor. That's over 30 plus essential Ghana Stock Exchange terms. If you are serious about building wealth in the Ghana Stock Exchange, start using these terms daily. Hope this video helps you a lot. Make sure you give this video a thumbs up, subscribe to this channel if you haven't already, and leave your comments or questions in the comment section. I reply to them all. Thank you for watching. I will see you in my next one.